Today here we are with Michael McKee, the economy editor of Bloomberg US TV. Mike, I want to ask you your outlook, your projections about both economy and the equity markets. And first, Fed. Let's start with Fed. Fed had a FOMC meeting, and it is December 13. It is a little different than November, but is it really different than the November meeting?
Well, what they said isn't particularly different, although they did upgrade their forecast or their assessment of the U.S. economy a little bit because things have gotten better. But underlying it all is a question of how much better, and that will really affect things going into 2012. The U.S. economy did pick up speed between the November Fed meeting and the December Fed meeting. If that continues, that has implications for whether or not they do another round of bond buying, QE3 as it's called by many in the financial markets. If they see the economy start to slow again, or if Europe should go badly and things there affect the U.S., then they're more likely to bring that on. Right now, a lot of people are saying if in the current economy, you would not see additional Fed easing.
We haven't seen any QE3 implication in the meeting and in the report, but some people say, some economists say that we should expect about $500 billion asset purchase. In that form, we should expect a QE3 the first quarter of 2012. Do you agree with that? Do you feel that when we read between the lines from this Fed's meeting?
If I had to bet, I would think no, barring any surprise from Europe. And the latest Bloomberg survey of economists shows that in general, economists around the United States feel the same way. In November, 69% said the Fed would do a QE3. Just before the meeting on December 13th, 49% thought that. So we saw a complete reversal in the belief about QE3 because the economy's picked up, because unemployment came down, and because the advantages to the Fed doing it become marginally and fewer and fewer. They get less out of it. So it's going to have to be something that really pushes them to move.
We are talking about going forward, and we're talking about Fed in 2012, right, the outlook, and also the hawkish members of the Fed. They're going to be replaced in January, if I'm not wrong, right? Like Kocher-Lakata, you name them, Glasser and such. So if they are replaced, should we expect to see something different? And if yes, what can we see?
Probably not going to see anything different because Ben Bernanke stays as chairman, Janet Yellen stays as vice chairman, Bill Dudley stays as the vice chairman of the Open Market Committee, which sets the policy. Those three are dovish. They look to cut interest rates, to be activist if necessary. So they really push the Fed in the direction they want it to go, especially Chairman Bernanke. So it probably won't make much difference to the decision. What you may have is a little bit less public discussion of it by people who might vote against it.
About the U.S. economy, Mike, can we see an underperforming U.S. economy? Can we see below 2.75% in terms of growth? What is your take in those areas, especially economy?
It's very possible, but that depends a lot on what happens around the rest of the world. Right now, the U.S. economy seems to be recovering. Americans seem to be getting back to spending. They have cut their debt quite a bit. There's still a long way to go. It's not going to be strong growth, but there can be 2.5% to 2.75% growth next year if everything goes right. The real question is, what kind of effect will we see on financial markets? What kind of effect will we see on export markets from what's going on in Europe? And also, what kind of effect does that have on confidence among consumers and companies here?
You said what's going on in Europe. Do you expect to see any short-term or long-term solution to that?
Well, one would have to say at this point, you can't have any expectations. They had 15 summit meetings in 2011. They had 5 meetings at which they declared we've solved the crisis, and none of them have worked. So one has to just keep their fingers crossed and watch what goes on, but keep low expectations.
Okay, and last question about equity markets in general. Should we expect a rally in 2012?
If we get a rally, it's probably going to be muted. At this point, the U.S. economy is performing a little bit better, but earnings are coming down. The projection for the most current quarter earnings is for about $10 a share, and we were $12, $14, $15 a share in previous quarters. So at this point, there isn't as much premium built into the market that you can reach for. And if we get everything going right and the economy continuing to grow, you probably won't see the stock market fall, but the gains we saw of the past year probably won't be there.
Thank you so much for coming. As always, it was very insightful, very, very valuable. Thank you.